Every reserve currency in history has eventually collapsed. The Portuguese real, the Spanish dollar, the Dutch guilder, the French franc, the British pound. Each one, in its turn, was the safest money on earth, until it wasn't. Right now, the US dollar sits on that same throne. It settles 60% of global trade. It backs 90% of currency transactions. Central banks hold it as their top reserve asset. But here's the uncomfortable pattern historians keep finding. No reserve currency has ever held that position forever. Not one. The average reign lasts somewhere between 80 and 110 years. The dollar has held global dominance since 1944. That's already over 80 years. So this video isn't about panic, it's about history, the pattern, and what a realistic transition could look like. Let's look at the pattern. So what actually makes a currency a reserve currency? It's simple. It's the money other countries choose to hold in their vaults, price global trade in, and trust as a stable store of value. When Saudi Arabia sells oil, it prices it in dollars. When Brazil buys wheat, it often pays in dollars. When Japan wants a safety net, it holds US Treasury bonds. That gives the reserve currency country enormous, almost invisible advantages. The US can borrow more cheaply than any other nation on earth. It can run massive trade deficits without a currency crisis. It can impose financial sanctions that reach almost anywhere in the world. Economists call this exorbitant privilege, a term coined by a French finance minister in the 1960s. He did not mean it as a compliment. But here's the thing about privilege, it's built on trust. The moment enough of the world doubts that trust, doubts they'll get paid back, doubts the currency holds its value, the shift begins. And that shift has happened like clockwork, for 600 years. Let's walk through it. It starts with Portugal. In the 1400s, Portuguese ships opened the sea routes to Africa and Asia. Lisbon became the financial center of the known world. Portuguese gold and the Portuguese real financed global trade for roughly a century. Then Spain, with bigger fleets and American silver, simply outcompeted them. Portugal didn't collapse overnight. It faded, gradually outfinanced by a rival with more resources. Spain's turn came next. Spanish silver from Mexico and Peru flooded the world starting in the 1530s. The Spanish dollar, the famous piece of 8, became the first truly global currency. It even circulated in colonial America, centuries before the US dollar existed. But Spain spent that silver on wars, not infrastructure. Constant conflict and serial debt defaults. Spain defaulted 6 times between 1557 and 1666, quietly transferred financial power north, to a country a fraction of its size. The Dutch Republic. Tiny, but it built the first stock exchange, the first central bank, and the first liquid bond market. The Dutch guilder became the reserve currency of the 1600s and much of the 1700s, nearly 2 centuries of dominance. What ended it wasn't a single crisis. It was a slower, relative decline. Amsterdam's finance kept the country rich even as its trade and military power shrank, until costly wars with Britain and France finally tipped the balance. Then Britain. Backed by the world's largest navy and the gold standard, the British pound became the undisputed reserve currency by the mid-1800s. London was the center of world finance for over 100 years. 2 world wars broke it. Britain drained its gold reserves, paying for both. By 1944, at a conference in Bretton, New Hampshire, the pound formally handed the crown to a new currency, the US dollar. One important detail, the dollar's story already has a crack in it. In 1944 it was backed by gold. In 1971, President Nixon severed that link entirely, moving the world onto a pure fiat dollar system, backed not by metal, but by trust, oil contracts, and U.S. military and economic power. That's the system we're still living in. Look at the pattern across all 5 falls. Military overextension, rising debt, and a credible rival gaining ground, every single time. So how long does a reserve currency actually last? Economists who study this like Barry Eichengreen at Berkeley, put the average reign at 80 to 110 years. Portugal, roughly 80 years. Spain, about 110 years. The Dutch guilder, nearly 200 years, the longest reign on record. The British pound, around 100 years, counting from Napoleon's defeat in 1815. The dollar has now held its position since 1944. That's 82 years as of this recording. That doesn't mean collapse is imminent. Transitions in this data are never sudden. They're gradual multi-decade processes. The pound didn't vanish in 1944. It slowly lost share for the next 30 years. What the data actually shows is this. Reserve status is a trend line, not a light switch. And right now, several trend lines relevant to the dollar are worth watching. Here's where the dollar actually stands today, using the latest available data. The dollar makes up roughly 58% of global foreign exchange reserves, per IMF COFR data. That's down from about 71% in 1999. A real decline, but still a commanding lead. The dollar sits on one side of about 88% of all foreign exchange transactions worldwide, per the Bank for International Settlements. Roughly 80% of global trade is still invoiced in dollars, even trade that doesn't involve the US at all. Oil, the world's most traded commodity, is still priced almost entirely in dollars. Though Saudi Arabia and China have opened limited yuan-priced contracts in recent years. Meanwhile, the Chinese yuan makes up only about 2 to 3% of global reserves, despite China being the world's second largest economy. So the numbers tell a two-sided story. Yes, the dollar's share is slowly shrinking, a slow bleed of a few percentage points per decade. But no, there is currently no rival close to challenging its position outright. That gap between declining share and imminent replacement is exactly where most online doom content gets it wrong. So what actually replaced each falling current? Portugal's real was replaced by Spain's silver dollar, a straightforward changing of the guard between two rival empires. Spain's dollar was replaced by the Dutch guilder, because Amsterdam offered something Spain never built. Cheap, reliable credit. The Dutch guilder gave way to the British pound, backed by the gold standard and the largest trading empire on earth. And the British pound gave way to the US dollar, decided not by war, but by agreement. 44 Allied nations sitting down at Bretton Woods in 1944, choosing the dollar deliberately. Notice something. In every case, the replacement wasn't the currency of a chaotic economy. It was the currency of whichever rising power offered the deepest, most liquid, most trusted financial system at the time. That's the bar any successor to the dollar would actually need to clear. Keep that bar in mind as we look at realistic scenarios next. So what would a realistic transition actually look like? Not the panic version, the historical pattern version? Scenario 1, gradual erosion. The dollar's reserve share keeps slipping a percentage point or two per decade, while a basket of currencies, euro, yuan, yen, gold, slowly gains ground. No single event. No collapse. Just a slow rebalancing over 30 to 50 years. Most economists consider this the most likely path. Scenario 2, multipolar system. Instead of one dominant currency, the world settles into 2 or 3 regional ones. Dollar in the Americas, euro in Europe, yuan in parts of Asia. This has never happened before at this scale, but a more multipolar world makes it plausible this time. Scenario 3, a triggered shift. A fiscal crisis or geopolitical shock accelerates a transition that was already underway, compressing decades into years. Historically, this is the least common pattern. Even Britain's fall took 30 years after 1944. What almost never happens, in 600 years of this pattern, is a currency going from dominant to worthless in months. With no warning. That's not how any of the past 5 transitions actually played out. What does this actually mean for your money? It means the dollar's dominance is a historical fact with an expiration pattern, not a permanent law of nature. It means the transition, if it accelerates, will very likely be gradual, measured in decades, not headlines. It means diversification, across currencies, assets, and geographies, isn't fear. It's just what history suggests every generation eventually does. The Portuguese didn't see Spain coming. The Spanish didn't see the Dutch coming. The Dutch didn't see the British coming. Britain barely saw America coming. The question isn't if the pattern continues. History suggests it does. The real question is simply, when? Subscribe for the full breakdown next week.